VIX, VIX, guys. CBOE Volatility Index. This guy is one fascinating chart. It's, I don't know if it's a stage analysis sell bull chart. I don't know if it's a chart, a classic chart, tradable chart. His behavior is definitely something to behold. So let's try to reduce the noise. A lot of noise on the volatility index. A lot of wicks. Wicks is noise from intra or smaller time frames, and these spikes. Look at that, 2008. Right here. Look at that. So if I reduce the noise, just focus on the opens and closes of those candles to define breakout levels, to define support. And in 2008 August, right here, already in 2007, already there was some type of event that had this creeping up. So right here you had this nice base, multi-year base, 2004, 5, 6, and in July of 2007, more than a year before the actual meltdown, you had a spike. It closed above that monthly defined breakout line. And after that, see these wicks? Now look at the size of these wicks. And volatility all during the course of that year, never to close below that huge stability period you had back here. Came back down, testing that previous resistance turned support. And final blowout September 1st, first explosion. And after that, the next month continued off October. Crazy wick all the way up here. Next month, almost as high. And after that, starting to cool down. All the way back down. Woo! All right. So there is, when you reduce those wicks and you try to draw trend lines and try to see the environment, the volatility of the environment, it helps a lot, especially on the monthly candle chart. It evens out all that noise, makes it smoother. But you gotta get ready. You gotta exclude those wicks. Those wicks are really intense. All right, so now let's zoom in to where we are today, guys. Where are we today? So we've had a nice base up to, wow, okay, right here. Here, at least I know I have the breakout right here. Let's move that up. Here's my support. So here, and monthly defined breakout, monthly defined support. Zoop. Okay, explode that. Did I have a base? Yeah, kind of had it right here. Here, you could have had a pattern right here, or even a tighter one right here. So we broke out of this low volatility base right here back in January of 2018, right here. Monthly candle close above this base base that lasted over a year. The next month after that, broke out above, closed above an even bigger base that dates all the way back to April of 2016. Huge wick. When we're going to zoom in on the weekly, we're probably going to see in which week this happened. Price action came back down, or the volatility index came back down. And now you're starting to define what the market is seeing as a breakout level. Close below that. Next month above, close below that. The next month gapped up, close below that. So right now we're starting to define the area, that monthly defined breakout area, resistance area right here. Volatility came back down. Wicks below that monthly defined previous resistance turned support. Wicks came back up, never to reach again the stability that we had back here, this low volatility period right here. Came back down, never to go back as low, starting to define that support. And after that, we're going to go retest that breakout line. Had a price action above on the daily, on the weekly. No, came back down. Next month, had a little bit of action above it. No, came back, stabilized. But look at that. You're starting to have the monthly average, 12-month average starting to go upwards. The trend of the volatility index starting to go upwards. And after that, December, you had a high wick. The volatility came back down, but it never came back down below this defined breakout. If I come back to 2018, same type of pattern, embryonic base, embryonic breakout, never came back down. The volatility above the 12-month average, dragging upwards. Some price action, some volatility action below it. And then after that, but never coming back down in this base area, and then exploded the next month. And then after that, you had a crazy extenuation candle right there. So let's see. So if you could want to compare base, breakout pattern above, skewing the 12-month moving average, and you seem to want to have more and more volatility, guys. So if I want to compare to get some reference, and that's a thing for the volatility index with stage analysis. It's been refined by many people, Stan Weinstein, and with charts, looking at charts in the stock market, futures, and they were able with their observations to identify the key elements that increase their chances of having a successful stage 2, a successful stage 4. But with the VIX, it's pretty much unique in the way it behaves. So it behaves almost like not an oscillator. Maybe it's hard to tell, but it's very delicate for me yet to try to decipher, measure moves, trend of the volatility index. When it goes up, doesn't seem to want to go up as long as it goes down. Blowout, and then stability. Kind of the inverse of a chart, right? A chart, when it goes up in price, it goes up slowly, greed slowly going up. And after that, when it breaks down, it's fast and furious. Volatility is kind of the inverse of that. And look at that. This month, right, it actually gapped up. All right, let's zoom in on the weekly. Let's get some more details. Where are we going with this? Yeah, Ichimoku Cloud defined resistance. We're out of it. Try to go out of it. Price action came back down on the weekly. And right now we gapped up. Is that this week? Where's my week? I think, yeah, it's right here. Going back up. Everything is still above. Here is my weekly defined breakout line. Above my monthly defined breakout line. Above my weekly defined breakout line. So everything's aligning in favor of a continuation of the volatility, guys. See the pullback right here. Breakout, sideways move, pullback right here. Breakout, pullback. I don't know if we're going to get that close. Then I would expect this to keep going up, guys, on the upside. Is there any use to compare this to the SPX? Well, if it's inverse of the XPX, so the more volatility, the more the decline of the SPX, this would make sense. When the volatility was low, it was underperforming the SPX. The SPX was actually going up. And when you had these spikes, the SPX took a hit and the volatility went up, outperforming the SPX. And this is what's happening here. Wow. Can we go in on the daily? Is there more information I could fetch? Okay, all my scribbles. Looks like a football drawing board. Hut. remove those lines. So I have my monthly defined resistance, my weekly defined resistance, my daily is going to be just a little bit higher. Oh. Move that line. So on the daily, the more you see green here, the more unsafe area in the SPX, the more it's declining. And recently we haven't been underperforming the SPX. We've been outperforming it. So the more volatility, the less the SPX is going up. Never coming back in that base. Breakout, and you see on the daily, pull down, and now gapped up. Got closed here 2 days ago before New Year's Eve, and now we're up here today. So are we going to bounce off this? Is this the bounce off these levels here? And we're going to go retest these high in volatility? Well, I guess time will tell, guys, but definitely the trend on the daily, on the weekly, on the monthly is up, guys. And the more volatility you have, the more it hurts assets, stock markets, SPX, NDX, and all of them. This, if you're long on the markets, the assets, you don't want to see this. You want to see this going down. And this could be the beginning of a breakout, of a continuation of the volatility, guys. All right, so that's my little breakdown of VIX. Never close below that monthly defined breakout level. Never close below that last weekly defined breakout level. Let's see if it keeps going up in that direction, guys. All right. Enjoy. Thanks for watching, guys.